Top 3 large cap mutual funds for the year 2025. Today, in this video, I'm going to discuss about 3 large cap mutual funds that you can invest in for the year 2025. These mutual funds shall give you excellent returns if you stay invested over the long term. I shall also give you a detailed explanation on why I have selected these mutual funds and the time period that an investor should ideally invest in these mutual funds. An overview on the importance of large cap mutual funds and why these should be included in your portfolio will also be explained by me. Large cap mutual funds invest in top 100 companies of India like Reliance Industries, Tata Consultancy Services, Larsen & Toubro, ONGC, etc. Large cap mutual funds offer stability and consistent returns over a period of time since these funds invest in companies which are established market leaders with a strong business model. But we must remember that large cap mutual funds not only invest in large cap companies, they also invest a small percentage of their funds into mid cap and small cap companies to deliver outsized return or large return for their investors. By investing in large cap mutual funds, investors should expect moderate returns with low risk. For achieving goals which will come up in the next 4 to 5 years, we can invest in large cap mutual funds. A balanced mix of large cap, mid cap, small cap, ELSS funds for tax saving and international funds is necessary to create an ideal portfolio of mutual funds which is both stable as well as provides good returns over the long term. Now, I shall discuss the advantages of investing in large cap mutual funds. First point is superior risk adjusted returns. Risk adjusted returns measure returns generated by a mutual fund per unit of risks taken. Sharpe ratio is a financial metric that measures the risk level of a mutual fund by calculating how well an investment's return compensates for the risks taken. This ratio makes an investor understand that higher returns generated by a mutual fund doesn't necessarily mean better investment skill. Investors should consider the risk level of an investment when deciding whether to buy or not. Generally, higher the Sharpe ratio, the better. It means that we are getting more returns for the level of risks taken if the Sharpe ratio is higher. The Sharpe ratio should be compared with the Sharpe ratio of other large cap mutual funds, and we should prefer a higher ratio as compared to competitors. Second point is lower volatility. Large cap mutual funds are less volatile than mid cap and small cap mutual funds, as they invest in well-established large cap companies which are market leaders in their respective industries and have a seasoned management. Their stocks are widely traded and less risky to experience wild price fluctuations. Third point is dividend income. Typically, every mutual fund, including large cap mutual fund, have a growth and dividend option. Dividend option should be chosen if there is an expectation of periodic income from your investments without actually redeeming any of the units. In dividend option of a mutual fund, profits made by the fund are distributed to unit holders. Fourth point is diversification. Large cap mutual funds usually have 40 to 60 stocks in their portfolio which are from different industries. This helps to minimize risk and provide diversification. Here, I shall give you the names of 3 large cap mutual funds which will give you excellent returns if you stay invested for the long term. First one is DSP Top 100 Equity Fund Direct Plan Growth. So the objective of this mutual fund is to invest in large cap companies which will give you capital appreciation from a portfolio of large cap stocks. And from time to time it also invests a small portion of its portfolio in mid cap and small cap stocks to generate some extra returns for investors. But more than 60% of the fund's portfolio is in large cap stocks. Fund size is 4,530 crore. It means that up to 4,530 crores investors' money is already invested in this mutual fund. Expense ratio is 1.93, which means that 1.93% of the portfolio of the fund's annual return will be deducted before disbursing returns to prospective investors. And I have also given a table for 1 year, 2 year, 3 year, 5 year, 10 year, which shows the annualized return of this mutual fund comparing to its category average. Category average means since this is a large cap fund, so I have compared the returns to the average of other large cap funds, mutual funds, which will give you a true picture of how this fund is performing compared to other large cap mutual funds. Then portfolio turnover is 39%. This means that around 39% of this mutual fund's portfolio the fund manager sells within 1 year. The lower portfolio turnover is generally better, which means that the fund manager holds the stocks for the long term. The number of stocks in portfolio is 33, with large cap constituting around 67%, mid cap 3.25%, small cap 0.81 and others 18.58. Now you may be thinking, what is this others? Others having 18.58. Others may includes some short-term investment instruments like TRIPS or money market instruments, which the mutual fund holds for liquidity requirements. For example, if an investor who is currently invested in this mutual funds decides to liquidate his investment, then the mutual fund sells these short-term instruments to generate cash to pay these investors. This mutual fund has an exit load of 1%, which means that an investor will be charged 1% of his total investment if he sells his investment in this mutual fund before completing 1 year. This charge is generally given to protect the interest of long-term investors and to encourage mutual fund investors to stay invested for the long term. The second large cap mutual fund is ICICI Prudential Blue Chip Fund Direct Plan Growth. The objective of this mutual fund is to generate capital appreciation and income distribution. A capital appreciation means to generate capital gains or to select such stocks which gives you good returns, and income distribution means to invest in those stocks which shall give the investors dividend income or regular periodic income from a portfolio that is predominantly invested in equity and equity related securities. So the majority of investment for this mutual fund will be invested in large cap companies. As you can see here, the fund size of this mutual fund is 63,938 crores. So this much investment this mutual fund has already received from investors. Expense ratio is a little less than 1%, 0.86%. And the return generated by this mutual fund is also pretty good compared to the category average. In all of these years, 1 year, 2 year, 3 year, 5 year and 10 year period, this fund has generated more returns than the category average of other large cap funds. Portfolio turnover ratio is also very less, it's only 21%. So the fund manager holds most of the stocks for more than 1 year. That's why its portfolio turnover ratio is very less. Number of stocks is 68. Total number of stocks in this mutual fund is 68. Out of this, 77% is invested in large cap stocks. Mid cap is 2.85%, small cap 0.58%, and others is 10%, around near about 11%. Fund manager is Anish Tawakli, Vaibhav Dusad, and Sharmila Demelo. They have good experience in this mutual fund industry. Two of these fund managers have worked for more than 8 years in ICICI Prudential only, and Vaibhav Dusad has worked for more than 7 years in this mutual fund industry. So they have good experience, total experience in the fund industry. This mutual fund has an exit load of 1% of sell value. Hello, if you like my videos and if you want me to bring out more such content, then please like and subscribe my channel. Also, you can comment on what topic you want me to bring out future videos. The third mutual fund that I have selected is Baroda BNP Paribas Large Cap Fund Direct Plan Growth. The fund size or the asset under management of this large cap mutual fund is 2,402.85 crores. So this much assets this mutual fund already holds under it. It has an expense ratio of below 1%, that is 0.82%, and the returns are also pretty good. If you compare it to category average, in all these years this mutual fund has outperformed the category average returns. It has a portfolio turnover of 61%. So the mutual fund sells 61% of the stocks in the portfolio before 1 year. This mutual fund currently holds 58 stocks in its portfolio, with large cap constituting 62.68%, mid cap 6.34%, small cap 1%, and other instruments it is currently holding nearly around 23%. Fund managers are Kushant Arora and Jitender Shriram. They also have a good long working experience in the mutual fund industry, and this mutual fund has got 1% as exit load. So the prospective investors have to pay 1% of their return if they decide to sell their investment within 1 year.